Hey everybody, this is Chad Carson. I was watching a video with Warren Buffett the other day. It was an interview where he was talking to MBA students, and he talked about an idea that I've heard him mention many times, but I thought it would be really helpful for us as real estate investors if I shared it with you. So I'm going to do this little video just to sketch it out. And the idea, he says, one of his most important investment strategies when Warren is buying investments over the years has been to buy businesses that have a moat around them. And this is, the idea is like, remember the old castles, and I'm drawing our little real estate house here, medieval castles to protect themselves from attackers had big moats, and Buffett likes to say if he wants to have sharks and alligators and whatever, as wide as this moat can be, the better. And so he wants to have businesses that have moats around them that protect them from attackers, which in the business world mean competitors. And so I wanted to explore what that means to have a moat, because what Warren Buffett says is that businesses with moats are the most profitable over the long run. And I think it applies the same way with real estate investments. The houses or properties that you look at are not all created equal. There are some that are going to be more competitive and to be more profitable over the long run if you're holding them for rental properties. And so let me explain exactly what a moat means. A moat in the business world means basically a competitive advantage. So this is something that you have, or your business has, or your piece of real estate has, that it gives it an edge over anybody else who's going to be competing with you. And in the business world, there's a few different ways you can have there's lots of ways you can have it, but some of the most obvious ways are you can have some big barrier to entry. So if it's really hard to get into your business, if other people have to spend a lot of money or a lot of time or expertise to get in there, then there's a barrier to entry. And just think about becoming a doctor, for example. You have to go through lots of years of schools, you have to borrow money to do it, and it's just a very long process. And just that time itself makes it a barrier to entry, which gives doctors a competitive advantage in the marketplace. There's a shortage of supply of them. So that's if you can do that with your real estate or your business, that's a way you can gain a competitive advantage. If you have something that gives you cost savings, built-in cost savings, that's a help. One of Warren Buffett's businesses, Geico, an insurance company, has some built-in cost advantages in that they don't use agents. They have national call-in centers, and they have people over the phone, but they have about a 10 to 15% built-in cost advantage because they're a non-agent insurance company for car insurance. So he said that's given him a built-in price advantage, and Warren Buffett's company owns Geico 100%. And they've done very well over the years for him. You could also have pricing advantages. I'm going to talk about this a lot more with real estate here in a second. Or have a high switching cost. So if it costs you a lot of money to get out of as a customer, if it costs your customer a lot of money to get out, then that locks them in, and they have to keep making payments to you. And so think about Verizon Wireless or some of your cell phone companies. They have big, high charges to get out of their contract, and so you tend to stick with those contracts because of that high switching cost. So then you could also you have trade secrets. So the fact that Coca-Cola has a special formula for their Coca-Cola makes it it's a trade secret. Nobody else can copy that. And there are different kind of patents that people have that give them a competitive advantage. There are marketing sources, special referral leads that people get, special relationships, or just excellent service. I think that's one of today, if your business can provide excellent service, that's obviously a competitive advantage, because there's a lot of people who aren't giving good service at all. So I just want to introduce you to that idea, but let me talk about real estate for a second specifically. So when you're out looking for real estate properties, I found there's a couple main ways that you can really build a moat around your real estate properties, or look for properties that will have a moat. And so number one, and this is sort of a cliche in real estate, but I have found it to be very true, is that having a desirable location. So you could also say an in-demand location produces much larger profits over the long period of time. Even if two properties were cost the same amount today, and one had a better location, it's going to make more money typically over the long run. And let me show you why that might be. Number one, over the long run, if you have a better property, there are fewer of them, and so the supply is going to be limited compared to the demand for those, and you can raise rents a lot easier. And just as an example, if you had a really good location in town where it was really difficult, or there were no new lots to build new houses, or if you're in an area of town where you bought a house for $150,000 and anybody to build a new house is going to cost them $300,000 because the cost of construction and the cost of development, you have a huge built-in advantage if you bought it for $150,000 and then new construction could only be built for $300,000. And that's in locations that maybe it's gone up in value over several years, but because of that, you have a very limited supply of your commodity, and it's going to be in demand. You can raise rents a lot easier. This also allows you to have low marketing costs. You put a sign, if you're in a really good location, you put a sign out in front, or you put it on Craigslist for a week, and the house is rented. Or even better, I know some people in my town who the prior tenants find friends who want to rent the house from them when they move out, because it's such an in-demand location. If you can find places like that, you're going to be able to raise prices. You're going to be able to have lower marketing costs, which also mean lower vacancy costs. And these, by the way, are some of your most important numbers that make a deal profitable or not. And then finally, you're also going to have negotiating leverage on some of your expenses, so you can cut your costs. Just a good example, if it's a very in-demand location, you have 5 or 6 applicants, you could pick the applicant who's able or willing to do a little bit of the ordinary maintenance on the house. So obviously just cutting the grass or doing things like that. You could also trade maybe a little bit of a reduced rent if they would handle the first $50 of maintenance on the house every month. And you can find the person who actually has a little bit of skills to do that, to change a washer and a leaky faucet, or a toilet that's running, be able to change the little parts in the back of the toilet. Those kind of things, you can have some negotiating leverage, which reduces your maintenance costs as well. So you can see that a good location translates directly into ability to make more money on a piece of real estate. So look for locations that are in demand, and they're going to be more difficult to buy. That's the nature of it. But if you can find a way to get into those properties using some safe long-term leverage, or using options or leases, that will be a profitable strategy for you. And then my second and final way of looking at this building a moat for our real estate properties is to find what I've heard called mousetrap houses. I think it was David Tilney, who's a teacher out of Colorado, who I heard this from. But he likes to buy houses that he says are like traps. People stay in them, and they stay at them out of their own free will. But he says some of the main things he does are he provides a lot of storage in his houses, his rental houses. And I want you to think about 2 different rentals that somebody might have. One is an apartment. It's a 2-bedroom, 1-bath apartment that has very little storage, and compare that with a single-family house that has a big 2-car garage and has an attic where they can put stuff. Now, if somebody has you know the rule: if you have space, you're going to fill that space up, aren't you? And so, if somebody moves into a house and they have a garage and they have an attic and they're able to store all this stuff, is it going to be difficult or easy to find another property to put all of their stuff? It's going to be hard. It's going to be very hard to find, and to find it that meets all their other criteria as well. And so in the cost of doing that, if they have to move, they might have to store the stuff, they might have to pay for a truck. It becomes a big hassle to move all that stuff. And so mousetrap houses are ones that are number one, also in a desirable location, but also that the house itself is attractive in that it provides storage, and it makes it difficult compared to other houses and other apartments that somebody would rent for them to move out of them. And the average stay of a person in his house is at least 5 years. And so maybe if somebody thought they were going to stay 2 years and end up staying another 2 or 3 after realizing there's not much else on the market where they can hold all their stuff. So I think it's a really interesting concept: mousetrap houses, in-demand locations. And both of those fit into the bigger economic concept of building a moat around your business, and that directly translates to having more profitable businesses. And if you compare those to Warren Buffett, who has businesses like Coca-Cola, American Express, these are just stocks that he owns, but also bigger companies that fit this criteria of having a moat. And so hope that's been helpful for you. Look for your own businesses and castles with a moat, and if you find some, let me know that you've learned something and used it in your own business. Have a great day.